Hi everyone, welcome to this webinar. Well, it's exciting times ahead and I'm going to make sure this is the best webinar I ever give. It's going to be entertaining and informative. Put into the chat box that you can see and hear me loud and clear, please, so I know to get on with everything. Okay, so I want to make sure everybody can see and hear me loud and clear. I'm going to send a last minute re-invitation to everybody who, for whatever crazy reason, might not already be on here, and there is no excuse not to be on this webinar. After all, we've got election time coming, we've got Brexit coming on, there is a lot of opportunities in market volatility, which means bigger moves in shorter spaces of time to make more money, because that's the definition of volatility. Thank you very much, everybody tapping in. Also, what I want you to do is tell me where you're from. So tell me which parts of the world you're from, just so I get a good idea as well. And what I'm going to do straight away is I'm going to kick off with some of the slides I want to show you, because I've got a whole load of material to cover. Okay, too much to do in too little time. Which story of everybody's life? Whoa, that one's not the right one. Let's cut that off. Let's go back again. There we go. I am getting it right, I'm sure. There we go. Nope, that's still not the right one. I will find the right screen share in a second. Oh, it's moved to screen 4. That's where it is. Let's see if there it is. There it is. There you go. Rules for trading the general election. I've broken this down into simple rules. People like simplicity. Brisbane, Australia, wonderful. All the way Cheshire, Quebec. Bonjour, Sylvain from Quebec, Canada. And we've got a whole bunch of people from London, New Zealand again, to go alongside our friends from Australia as well. Okay, and India, Bhavik from India. Now, let's start off with one, whichever part of the world you're in. I'm going to put a poll up there. We're going to keep this interactive as well. Eric's in Reading. I'm going to be speaking at Reading University tomorrow. Hi from our friends in beautiful, beautiful Ireland. Hello, PJ, to you as well. Okay, there's a little poll I'm putting up there. Who's going to win the UK election? Whatever you say is going to become the law, guys. So be careful how you choose. Now, rules for trading the election, for Brexit, and beyond that, and not just in Forex, but stocks, indices, commodities, because all these things they require two things. When do you buy, when do you sell? They've got all humans behind them. Therefore, we can apply the same principles. And in this webinar, it's for everybody from beginner who's thinking, look, I'm just toe dipping into whether I want to do this or not. At the end of the webinar, you might decide, hey, you know what? This trading malarkey is not for me. All the way to the expert who's already profitable and is thinking, look, how do I make more profits? And they want the top tips from people in the UK as well. Thank you, Sylvain. Noel from Trinidad, the Caribbean. Wonderful. God, I wish I was in the places you guys are. I'm stuck in Mayfair. Anyway, let's carry on with where we are. Checklist. We are, first rule, concentrate and focus for success. You all know this. If you want to be successful, you've got to concentrate, you've got to focus. So let's get through a checklist to help you concentrate and focus. Close the doors, make sure it's quiet, no TV, focus on this. No one else using broadband. Yesterday, last night in the webinar, we had a whole bunch of people, and I'll show you some of the trades from yesterday. We're rolling them forward to today, who said, oh, we can't see the TV screen or whatever else, and that's because you've got other people on the broadband and sucking up your broadband. Don't use anything else on your computer as well. So if at the same time as watching this webinar, you start browsing the internet and watching YouTube or whatever else, guess what? This webinar will crash, and that's not a good idea, because I want you to grab a notepad which says making money. Trading is, after all, about making money. Cara from beautiful North Carolina as well. That's lovely to hear. I think, is Raleigh in North Carolina or is it in South Carolina? But what a beautiful sort of tobacco country, I think it is. Love the United States. Okay, making money. I want you to write that on the notepad. As David Kite, one of my mentors, said, when I interviewed him for my book 20 odd years ago, The Mind of a Trader. When I wanted to be a trader, I thought I better meet the world's leading traders. So I thought the best way to do it is to write a book interviewing them. So I interviewed 10 of them. They became mentors and friends. David Kite was one of them. Lessons in Trading Strategy from the world's leading traders. Don't buy the book. I'm going to give you the best bits in this webinar. And it's 20 years old and I only get £1 in royalties. So don't buy the book. But the Financial Times are the publishers, as you can see, big fat thick book. And I'm going to give you the best bits in this. And David Kite, one of the leading traders in the world who I interviewed for that, said, look, we're here to make money. And I thought, if he's not embarrassed to say it, why should we be embarrassed to say it? People are always a bit embarrassed to say, I want to make money. I want to make money. They think it's crass. Well, actually, it shouldn't be. Okay. Especially when, look at this, 10 best paid hedge fund managers made $7.7 billion in 2018. Do you think they were embarrassed? I don't think so. By the way, you're going to see down there, you see a WhatsApp number for me. That's a UK number, +44 for those of you outside. If ever you need to get hold of me on WhatsApp, there it is in my LinkedIn profile. Take a picture of that screen if you wish. Okay. Anybody else want to do the poll? Who will win the UK election? Because the results are very interesting. Okay, they're very interesting. So if any of you want to do that poll, you might want to do it now. Okay, and I'll tell you why. I'm going to display it in just a second, and when I display it, you're going to think, "What the heck? How did that happen?" Okay, good. I'm seeing more of you doing it. All right. So that being the case, let's get in on the action. Let's make a bit of money. That's what our job is. And that's what the focus of this webinar is. And we're not ashamed of it. We're not embarrassed of it. You can do a lot of good works with money. Okay, so nothing to be embarrassed about. Now, as I said, there's an election coming on. So what are the rules for trading the election? What are the rules for trading Brexit? What are the rules beyond that? Not just the UK election, but the US one, to go beyond that for profit. One of the first things I've got to get across to everybody is this. Okay, is this. One of the main problems people have is they think, one of the main problems people have is trading is not about getting rich. They go, what? Surely it is, Alpesh. Surely it's about pictures of people running around in Lamborghinis and Ferraris. No, it's not. That is guaranteed to make you poor if you think trading is about getting rich. And I'll tell you why. If you think trading is about getting rich, you're going to do very large size trades with money you can't afford to lose in low probability trades, which will most likely lead to losses. And then you'll put more money after those losing trades, and you actually will be the exact opposite of rich. Okay. It is when you think something is about getting rich that you end up taking more risk with money you can't afford, and then making bad decisions because you think, oh no, it's about making money, so I better throw more in. How else will I ever get rich? Let me take big risks. Trading is not about getting rich. When I interviewed the world's leading traders, this blew my mind because I thought to myself, it was all about getting rich. The best way to get rich, they taught me in every single one of them, and it's a Financial Times book. I'm not don't buy the book. I'm giving you the best bits in this webinar, but it's a Financial Times published book. So the Financial Times read every page of it. And then when I wrote my columns in the Financial Times, I again repeated all of this, and people reading the paper said, wow, this is great. So this is all being vetted for you, okay, by the best financial journalists in the world, the best people to interview this, as well as myself as a hedge fund manager. The best way to get rich, all these traders said, is you're making a little bit of money every day. You're trying to make a little bit. Nobody's taking big bets thinking, oh, I'm going to be rich. Okay, so we're going to reduce that's perfectly fine, Sylvain. We're going to try and reduce some of this these sort of errors people make. By the way, on the issue of who will win the next UK election, Conservatives 48%, Hung Parliament 44%, Labour 7%. Well, it probably gives us a good idea of what's going to probably happen. I think that's a pretty fair bet. Whether the Conservatives get a majority or it's Hung Parliament, it's probably even in the balance. The likelihood of a Labour majority is very small. Okay, useful information. What does that mean for our trading? What does it mean? I will tell you in a second. What trading is actually about is trying to make maybe 500 to 1,000 a month. And I'll tell you why. People say, no, surely it's about millions. You're going to teach us all how to get Ferraris. No. All the successful traders in the world will tell you, first you learn to walk. First you learn baby steps. Once you've learned those simple, easy skills with maybe a demo account and then a small trading account, and you're confident in your skills, just like when you learn to drive, you first go into a car park, you don't go on the freeway. Then once you've learned those skills to make, say, 500 to 1,000 a month, you can scale up. You can scale up afterwards. You don't go in with, somebody messaged me today and said, do you think $10,000 is enough to start trading with? And I was thinking, no, if you're starting trading, start with a small amount. The market's not going anywhere. Learn the skills first. You might be lucky. The skills, you might learn them in a week. You might learn them in a month. But increasing the amount of capital is directly likely to make you less successful. And I'll tell you why. The more capital you have when you're learning, the more stressed you're going to get of making mistakes because you're a beginner after all. And therefore, you're less likely to learn and be successful. Whereas if you've got a smaller target, I'm going to teach you how, through a business plan, get that smaller target of 500 to 1,000 a month. And the difference between rich and poor for most people is 500 to 1,000 a month in their pocket at the end of the month. And the reason is that's the difference between paying down their credit card debt, not all of it, not clearing it off in a month, but paying it down. Isn't that a nice feeling? Or paying down their rent or their mortgage or topping up their pensions. Most people on this webinar will be retired or they'll be in full-time jobs where they want to top up that income. Given that that's the case, let's be sensible and build it up in small steps. Now, I know other people out there will want to charge you $5,000 for a course to teach you how to get a Ferrari tomorrow. Well, what they're actually trying to do is charge you $5,000 for a course and sell you a dream. The actual dream you should be excited about is not the Ferrari tomorrow. The actual dream you should be excited about is you're about to learn one of the greatest entrepreneurial businesses in the world, which will last you for a lifetime. And if something's going to last you for a lifetime, what do you care if it's a little bit every day rather than a big lump sum tomorrow morning? Okay? You'd rather have a small amount every day than a big lump sum. Now, I'm not saying we're going to make money every day. There'll be months we make more. We save those excess profits of the months in which we make less, and we iron out the ups and downs. So on average, we're going to try and be consistently profitable about 500 to 1,000 a month. Like I said, some months we might make 2,000, some months we make nothing. We iron those two out. On average, it'll be 500 to 1,000 a month. That's the way we're going to do it. The reason is there are two ways to get rich. One is make huge bets on low probability outcomes. Number two is small bets on high probability outcomes many times. Guess what the most successful, richest people in the world do? They do number two, small bets on high probability outcomes many times. That's what actual trading, successful trading is about. And that reduces your stress levels as well, because you're not going to be making big gambling bets. You're not at a bloody casino. Okay. The third way to get rich is just to fantasize that you can make huge bets on high probability outcomes all the time. That's when people are trying to sell you a dream. Anybody who's ever tried to sell you a course online about trading is trying to sell you number three. Oh, you can got high. I know this setup every fortnight. All you have to do is do this one thing every single fortnight. Really? How come they're not a regulated fund manager? Because if they're any good, people would be shoveling money out of them. That's what happened to me. I'll show you later. I won a competition in the Financial Times, then on Bloomberg TV, and I had institutions coming to me. Why don't you set up a hedge fund? And I thought, I know how to set one up. And they said, okay, we'll help you. And they did. And now we've got Rothschilds at the bankers, and we've got Ian Wise, the auditors, and it's been around for 14 years, because if you're any good, people are going to come up and say to you, here's a shed load of capital that you can't say no to. You're not going to be sitting around trying to sell online trading courses, okay? And people say, why do you give these webinars? Why do you give these webinars? Well, they're just a distillation of all my Financial Times columns and my 18 books on trading. Why did you write books on trading? I wrote the books on trading because before I had a hedge fund, I wanted to raise my profile so that I could raise capital from institutions. We have investors in our funds such as AXA and Aegon, High Net Worth, and so on. Now, the good news for you is all trading, my friends, is about two things: when to buy, when to sell, right? I know we've got a general election. I know the markets are going to be moving up more and down more than they've ever done in a shorter space of time than they've ever done, because we've got a general election. And in a second, I'm going to show you some of the live trades we're looking at right now, which ones we like, what are our favorites. Each one of these little windows represents a different trade. So you've got DAX, you've got euros, dollar, you got Apple, you got Ripple, even sterling, US dollar, Dow, euros again, Citibank, Google, Disney. Anyway, the point is we'll go through all of this shortly, but that's not all. We could have had a gazillion other trades. Look at all this. You've got all these currencies: US stock, General Electric, Goldman Sachs, Netflix, Nokia, plus European US stocks, cryptocurrencies, oil, gas, commodities. My God, you name it. Look at all this that you could be trading. The point is you're going to be trading all of it. You're going to pick, and I'm going to show you what to pick, what time frames. I'm going to give you a total business plan, everything broken down systematically. So you leave this webinar going, you know what, that guy, Alpesh Patel, I'm going to put it on social media. He's just brilliant, the amount of information he gives. So like I said, given all this data exists and it's live, real time and free, let me say that again, live, real time and free. And you've just got two decisions to make: when to buy and sell, and you get the same data as George Soros or Warren Buffett. How come 80% of private investors lose money? Because they do. After all, like I said, they've just got to decide when to buy. And anytime in this webinar you see a green up arrow with a green horizontal line, that means that's a buy signal and where to buy. The green line shows you where to buy. Okay. How come, if that's the case, that, and I'll explain how that arises, what our rules are in our trading, which gives rise to that. How come that, and on the same trade, you get the same data. George Soros might make $1 billion. How come 80% of private investors still get it wrong? That's what we're going to talk about. And don't tell me it's because, inside information. Nope. Because what is the excuse? They still get it wrong when they've just got two decisions to make and they get the same data, the same information, the same platforms. How can they still get wrong when to buy, when to sell? Right? That's what we're going to solve. And I'm going to show you that there's 99 ways to get it wrong for a private investor. There's probably one or two ways private investors should be trading. And I'm going to share what I think are those correct ways they should be trading in a second with you. Okay, so I'm going to share that with you now. Quick warning. I'm going to make sure at the end, everybody gets a bonus. They get lots of information on infograms, mind maps, everything, all of that for free right at the end for staying with me. But remember, this is educational. I don't want you, just because I'm going to show you in a second a sterling trade we've got at the moment, I don't want you to say, oh, Alpesh told me to buy sterling and I blew my head off. I remortgaged my house. And now what? In fact, I'm going to show you that sterling trade. Okay, I said in our email is going out, we are long sterling for the slightly longer term. For me, the 4-hour time frame is the longer term. Okay, and you can see that we had on the 11th of October over here a buy signal. You can see the short signal didn't make us any money, which was down here. That doesn't matter. We had a big win here. We had a big fat win. Let me just put an ink on there. A little bit of ink. Come on. Okay, you can see there that shot up over there to there. And then we had a small little victory here. And now we're currently long as I speak. Okay, as I speak. Now, I want to tell you some important things about trading, right? First of all, notice how we never get in at the bottom and out at the top. I wish we could. We don't have a crystal ball. The other thing you'll notice is you don't need to enter at precisely the very moment it's there. Any good trades, any good trading strategies, like I'm going to show you, will give you a whole massive window of opportunity in which to enter. Look, you had hours to enter there. And the reason for that is because that's before the market moves up. And it's the same usually with most trades that we show in our strategy. So I just want to blow a couple of myths and I'll reiterate some of those as we go forward in any event, right? Given that we see headlines like this was in the UK paper, The Independent, and it says mystery traders made 1.8 billion from stock market bets. How are we going to handle this? How do we get our hands on some of that money? And how do we handle the fact that Donald Trump tweets and China and Brexit and the UK general election? Well, let me tell you several things we're not going to do. I'm going to give you some rules of trading, write it down on the pad and paper, and then I'm going to give you a trading strategy and a business plan and a holistic approach so you don't have to be a screen slave and you can just know when to buy, when to sell, and get on with it. Okay. Most importantly, I'm going to show you the 99 ways of things you shouldn't be doing, which you've been taught by really bad so-called educators out there. And if you want me to give you opinions on any of the educators and trainers you might have come across, put it into the chat box and I'll give you my opinions, the same ones I've given in my Financial Times column, where part of my job when I was writing my diary, my weekly trading diary that the FT asked me to publish, part of my job was to tell you how bad some of these educators, so-called educators, are. Okay. Problem: news. There's going to be so much news, especially with the election coming along. We do not gamble on news. There is a way where you can trade gambling on news, trading just before the news or just after the news. That's not what we're looking to do. We're going to ignore it because in the modern era of Twitter, it's become way too difficult. Way too difficult. It's not your business. That's not what you're going to do. What we're going to do instead is ride the coattails of moves made by big banks and others. Whether those moves have been initiated by a tweet doesn't matter. Once a move is in place, that's a higher probability trade for us. I'm going to show you how we do that. So coattail riding is how we're going to trade. Okay, coattail riding off the backs of what the bigger banks are doing. Like I said, not least because when you see this much headline, this much news, and you're going to happen with the UK election, going to happen with Brexit and the US election. So this is going to continue for basically another year, at least another year. And you see all of this. The methodologies I'm going to teach you is not the way to do it. Sanjay, I don't like any brokers who are not, I don't like any brokers who are Cyprus regulated. So if they're Cyprus regulated, forget about it. Clive has asked about somebody called Jason Grosstead. He's not a hedge fund manager. He's not regulated as an FCA regulated hedge fund manager. So if they're not managing money and they're teaching, that's fine. That's a bit like going to Poundland or Lidl. Listen to the people who are regulated to manage capital, because that means that somebody's entrusted them with money, and it means somebody's going to shoot them if they don't manage that money properly. Those are the people you should be listening to and trusting. Right? So given all of this roller coaster stuff, we've got to make sure we are not trying to trade around news. If you want to trade and gamble on the outcomes of general elections and the news, then go to Ladbrokes. Okay? Go to Ladbrokes. That's not the way we're going to trade, because it's too difficult for private investors and becoming increasingly more difficult in the era of social media. So what are we left with? Well, here's another rule. Do not try to outsmart the banks. This is a critical mistake so many private investors make. Okay, what they try and do is they say, well, on my analysis, sitting at home, I think I'm cleverer than Goldman Sachs, and I'm going to tell you what we're going to do. No, that's not what you're going to do. You are not going to try and outsmart the thousands of people Goldman Sachs not only hires to analyze the markets, but actually the billions and trillions of dollars they have at their disposal to make sure their analysis is proven right through a self-fulfilling prophecy. I see their data and information coming across through my desk. I'll tell you at the end how you can access what I got, because I'll send it to you if you wish later on. Okay, similarly, we're going to ride the coattails of some of the big funds which are making money on Brexit bets. We're not going to try and outsmart them. We're not going to try and be them. See that fat cat in that image? You're not going to be him in the space of a 90-minute webinar. What you're going to do instead is ride their coattails. So that's, we need to know, how do we do that? Because I think that's a safer, better way for you guys to do it. Okay? Not least because, and listen to this carefully, it is not, markets are not about the truth. The markets are not about whether or not the dollar should be higher or lower. They're about, very often, who's got the most money. It is might is right. It is not about whether or not Donald Trump should have left Syria. It is the fact that he did, and you got to deal with it. All right. So don't deal with the world as you think it should be, but it's what's presented in front of you. What I mean with the markets is, therefore, we're not going to try and out-analyze, because even if you disagree with UBS, guess what? They've got more money than you. They've got more firepower than you. Any disagreement is going to lead to you losing money. So we're going to try and ride their coattails because we want to buy low, sell high, or sell high, buy low. Why something moved is a distraction and an irrelevance which private investors get obsessed about because brokers try and sell them on stories. Oh, we're going to give you a webinar with our insights on the fundamentals as to why something's going to happen. That's great. It's very compelling for the human mind. You know what real traders do? They don't give a shit. What they care about is buy low, sell high. What made that happen, whether it was a tweet, an analyst report, doesn't matter. Whether it should have happened, whether something is overvalued, overpriced, doesn't matter. The fact that I can ride the coattail and sell it, that's what I care about. I want to buy it and I want to sell it. I want to buy it and sell it. It sounds spivvy. It sounds like you should be working in a market stall. Maybe, but that's the reality. The other thing you need to be aware of is when these trends are happening, this momentum trading is happening, you are not going to go up against people like this. Systematic quantitative trader, leading hedge fund, London, job hire. This is a job hire. These are the kind of people they're recruiting. Do you really think if they thought you knew more than them, they would pay hundreds of thousands to quants? They'd just hire you, wouldn't they, on this webinar, right? So instead, okay, instead what we're going to do is we're going to let them move the markets using their clever brains and their quantitativeness and all the rest of it, and we're going to just ride their coattails. We won't make as much money as them, but it's fine. Somebody's asked me about Sandy Jeddah. He's not a hedge fund manager. I know Sandy, nice enough bloke, but being nice doesn't mean that you should be, if it's free education, fine, but it's all a bit historic and it doesn't keep up with what's happening in AI and some of the stuff I'm going to show you, I'm afraid, Chris. Hi, Chris from South Africa. Love it having people from South Africa as well, all corners of the earth. So, rule. If you want to learn how to make money, should you not be learning from the best people in the world? And I don't mean me. Should you? I mean, it's your money. If you don't want to learn from the best, then I'm questioning why the hell, why do you want to take so much risk? And by that, what I mean is I'm going to make sure I give you the latest research out of places like Cambridge University, okay, which says gut feelings help make successful traders. Well, how are we going to develop our gut? Okay. It's also that I used to publish some of this research in my Financial Times column. And when I wanted to learn to trade, I approached the world's leading traders. I used the book as a trick to get to them, because I said to them, if you agree to be interviewed by me, then the Financial Times will publish the book. And I said to the Financial Times, I'll get you 10 of the world's leading traders. And that worked. And I had to do that because I wanted to be a trader. And if I wanted to be a trader, I thought I better meet the best traders in the world. Okay, people like Bill Lipschutz, who's in the book, David Kite, Bernard Opedy, John Najarian, right? Bill Lipschutz was global head of foreign exchange at Salomon Brothers. He's in my Financial Times published book. Now, the reason I keep saying this is not to brag. Okay, I've got 18 books on the bookshelf over my shoulder that I've had published in 8 different languages by the FT and by Macmillan. It's to establish the credentials and the basis of why you should be listening to me and not some of the Muppets that are trying to charge you a fortune for courses, okay? The chairman at Salomon Brothers, when Bill Lipschutz was there, was Warren Buffett. Right? So you can see the kind of quality of people I was dealing with. Bill Lipschutz was global head of foreign exchange at Salomon, so he was the biggest trader in the world. And what I'm going to teach you is stuff that he taught me. Also, the other people, he became a mentor and a friend, but the others who became mentors and friends and what they taught me as well. Okay, that's what you're going to get in this webinar. That's the quality of information you're going to get. I think we've got the best information in the world of anybody out there. I'm also the only regulated hedge fund manager in the world who talks to retail clients, i.e. people like you, I'll say ordinary people, not institutions. And the reason is I was one of you before. Okay, that's why I have an unusual background in that I was a private investor, met these people, and then learned to be a trader. Okay. Another rule, we are not in the forecasting business. Now you might think, what? Surely trading's about forecasting. No, we are not in the forecasting business. We do not have a crystal ball. Okay, I cannot see the future. And the reason for that is here's a headline from the Financial Times. Forecasters flummoxed by competing oil prices. Forecasters are analysts. They're trying to look in the future. We're not trying to look in the future. All we're saying is that we're going to ride the coattails of a move for as long as we can. And then when it stops moving, we won't ride the coattail anymore. That's all. Going back to that sterling US dollar, which given Brexit and the UK general election is probably the most important chart, certainly the most timely one and relevant one to bring up. Given that, we're just riding this coattail, okay, for as long as we can and when we can. And as I said, we're long this at the moment. We'll see how that goes. Our sort of little multiple indicators here, which I'll explain what they are later, also suggest that it'll continue. We are riding coattails. Notice how we didn't get in at the bottom. Anybody who shows you charts where they get in at the bottom, they're lying to you, because that would suggest forecasting and witchcraft. Okay, so we're not in the forecasting business, and I'll explain we're in the trend following business because forecasters haven't got a bloody clue either. And if you want to bet why forecasters haven't got a clue, just ask them to predict election outcomes. They never predicted Donald Trump. They didn't predict 2008 and all the other things as well. So don't fall for forecasts. We're not in that business, okay? And let me tell you something else. Success takes a hell of a long time. So here's a rule. We're going to trade using the simplest rules because we're private investors, so we don't want to complicate it with, artificial intelligence and stuff because you don't have supercomputers. We want it to be easy to follow. And we're going to use the best possible shortcut, which is somebody else's mistakes, namely mine. I'm going to teach you everything I know in the shortest space of time. So when you see me on the BBC, my overnight success took a lifetime to achieve. My point is the best way to succeed, the way of success for everybody is learn from somebody else's mistakes. Don't make your ones. Compress the time it'll take you to learn. And that's why I'm here. Now, given that, that was my team outside number 10, that doesn't mean I've got any special inside information on Brexit or the general election. I want you to know that. That's us outside Downing Street. Anyway, and I'm showing off. I'm with the rules. My point with you is it's taken a long time to be that successful and that well known in my industry for what I do, that I'm asked on TV channels and the like. Again, the point being that whilst it's taken a lifetime to achieve all of that, I'm going to compress the time it takes you. So sometimes it might look like, whoa, he's moved on really quickly. For instance, this chart, I want you to make a note of that and I'll explain what all of that is, okay? What I'm trying to say to people there is that I want us, and I'm going to show you the business plan for doing this, okay, because I'm going to get you up to speed. I'm going to get you to being successful. All right, I'm going to say to people, what I want you to do is trade 15 minutes a day, scan 12 to 24 products. Don't worry, I'll tell you which ones. Scan 12 to 24 products, and then I want you using those products to and which products I'll tell you as well in a second. Okay, on one screen, do one trade a day and 20 trades a month, right? And these are the products I think are the most important. And I'll go into more detail throughout this entire webinar, why I think they're the most important, how I came to them, how I came to the conclusion they're the most important, and so on. Okay, so many of you will have seen me on TV often talk about these algos, and this is the way people are trading now. It's important you're aware of that. So I'm just closing out a couple of positions, and I'll show you what those were in a second and share those trades with you. There's just so much going on. I've got an assistant, but she's doing other stuff as well. At the same time, she's monitoring some of the other trades. So I will explain how we came to all of those as well, all of those positions that we opened and why we opened them. All right. Now, I love the DAX. I want you to diversify, having a mixture of long and short trades. I want you to diversify across timeframes. That means you might be short on the, let's have a look what we're short on at the moment. Okay, you might be, like me, you might hold Disney for the long term. But if you hold a stock like Disney for the long term, you might look for opportunities when you think it's going to fall. See that red arrow? And you short it. Why? Because if you make a bit of profit while it's falling, you can use that to pay for the cost of it whilst for your long-term holdings. So your long-term holdings become free effectively over a period of time because your short-term short trades have paid for it. Now I do this with tech stocks because my long-term holdings in technology are Google, Amazon. They're all basically the classic ones. You'd expect Apple, for instance. But because I know I'm going to hold these for 50 years, I am more than happy to look for opportunities, any I get when the prices are falling in those, to short them. All right? Okay. I like the DAX because I just think it trends a lot better. I want you to look at minor versus minor currencies, such as Australian dollar and New Zealand dollar, because I think they trend better. What's a minor currency? What's a major? There you go. I've written it there. These are the best timeframes, I think, when the trends are the best. But you don't have to trade only those timeframes. I'll say that again. You don't have to trade only those timeframes. And then you got the 1 hour time frame, which I think is ideal. Trade on the 1 hour time frame if you've got a day job. And the reason for that is if you're trading the 1 hour time frame, if you've got a day job, you'll get a signal. Let's look at the Dow, which we've got up on the 1 hour time frame. You'll get a signal. Look at this. You got one on the 25th of October. So you got a day job. Let's say you trade the 1 hour time frame. Doesn't mean you got to be a day trader. Then you got another one on the 29th of October, which was yesterday. All right. And we're short this at the moment and it's a little bit in profit. So hopefully it'll turn even more in profit. And this was a nice little fat gain for us. The point is, signal was, what's that? 25, 29, 4 days apart. There was a 4-day time difference for that trend on a 1 hour time frame, So that's ample time. If you've got a day job and you're just looking at the markets a few times, a couple of times a day, you can see how big a trend could occur without you ever having to do a daily chart, which is just too few trends in a day, especially now with Brexit and the election coming on. The trends are going to be, they're going to be bigger in a shorter space of time. That's the definition of volatility after all, bigger moves in a shorter space of time. Having said all of that, for you to be rich, this is what your trading will look like. And I guarantee it, out of 100 trades, for me to try and make you rich, I've got to make sure in the strategy I'm going to give you, you don't have any big losses because you're going to have stop loss rules. And I'm going to show you how to implement those. You might have small losses and small wins because what we thought was going to be a big win, which is every trade we think is going to be a big win. Donald Trump does a tweet, the market reverses. So we might have small losses, small wins. And I'll show you how to keep your losses small, how not to be a screen slave. And some of these will just they'll be the jackpot. They'll just keep moving up and up and up and up. And that's exactly what we want. Those that keep moving up and up and up. Okay. Those are the ideal ones. And those are the ones which look, 80% of your profits in a year will come from 20% of your trades. And those 20% will be the big winning ones. So how do we find those? And what do we do when we have found them? All right. I'm going to show you how you do that. I know the numbers you're all chasing. This was from research I did for a book I wrote about 3-4 years ago, where I took all the data from all the leading brokers in the UK. And it was anonymized data because I wanted to analyze, is there certain things that successful traders are doing right? In the private investor block, are they doing things similar to hedge fund managers? For instance, I wanted to ledge or at least confirm something. And don't trust this broker. I don't know who they are, but this is what their data says. So I don't know who they are. I don't necessarily trade with them. And it was data they had from 2012. And they said their top trader made £1 million in profits. Average profit from their top 100 was £96,000 per trader. Okay. On average. Now you might think, wow, that's not our goal. Our goal is 500 to 1,000 a month. Well, Alpesh, why such a small amount when we know the potential so big? Well, at this stage, I just want you to know the potential. Okay. We want to start small, put a little bit into the bag, 500 to 1,000, learn the skills, and then we'll worry about scaling up. Okay. Then we'll worry about scaling up. Now I've got to ask you one more thing very briefly. If I promise to give you great content, do I have your presentation in the last 10 minutes right at the end to tell you some technology my hedge fund spun out? We think it's the Google of trading. We've spun it out from the hedge fund. We are going to float this on the stock market. We think it's going to be as big as Google, and we're pretty excited about that. So do I have your permission right in the last 10 minutes? You don't have to stay for the 10 minutes. if you don't want to do that, please. Okay, so I'm just going to put yes into the chat box if you give me permission to do that. All right, that's what I want to know. Something else I want to know. Do you think it's going to be a hard Brexit or not? Thank you very much, Babette, Robert, Michelle, Louisa. Thank you very much, Sandeep. Thank you all very much. Now, let me just continue for a second. All trading, and what I'm going to teach you, has to break down into these areas. Selma. Stop losses, where do we put them? How do we know when to enter a market? Limit orders or take profit, how do we know when to take a profit? Trading psychology, given that we're in volatile conditions of an election and 1 minute the market's going up and the next minute it's going to be going down, how the hell do we manage that psychologically? How can we, with calmness, say, okay, I'm now, look at this, I am now long the pound. Oh, now I'm short the pound. No, now I'm long the pound. Won't that drive us mental? No, it'll make us money, so we don't care. We're not trying to sell ourselves, oh, I'm long the pound because I think the FOMC will do this, and I think the ECB will do this. Okay, listen, I've got a master's degree in economics from the world's #1 university, and I don't use it for trading. Because what the FOMC and the ECB are going to be doing, it's guesswork compared to, I might as well just toss a coin. What I'm looking to do is let somebody else move the market based on their beliefs of what all of this macroeconomic stuff means, and then I'll trade off the back of that. So I'm not actually trading the macroeconomics, I'm trading somebody's perception of it and where they're putting their money. That's an important difference. Now, that makes me very relaxed and should make you very relaxed as a trader as well, because it means, hey, I don't need to spend all my weekends reading newspapers and being a screen slave. I'm just going to copy what somebody else is doing. So remember what I'm teaching you. I'm not teaching you how to be the Isaac Newton of traders, the best in the world, the first one, the original, the novel one. No, I'm just saying, hey, you see that Isaac Newton over there? Just copy what he's doing and you'll be good enough. You'll make enough money. That's what we're doing. And in case you're wondering, why would any hedge fund ever reveal their secrets? Well, actually, they're not secrets. First of all, right, read this headline. One of the biggest hedge funds in the world released a video to demystify how it makes money. Man AHL, right? 19 billion under management. We're always telling people how we make money. We have no issues with it, right? There's no, what's it going to do? What are you going to do if you know how we make money? What are you going to do? Are you going to, well, I don't know. I don't understand what people think they're going to do just because they know the same strategies we do. We have 10 strategies in my hedge fund. I'm going to tell you only one, the first and oldest one, the easiest one, the most appropriate for retail clients. There's no point telling you ones which aren't appropriate for you or complicated ones when you can have simple ones. Okay, so we have 10 different ones that we use for different products, client bases, and so on. Right, so let me just show you some slides I've taken from Man AHL, one of the world's largest hedge funds, because our rule is ride coattails, don't forecast. Our rule is keep it simple and repeat. So I'm going to show you how simple a $19 billion hedge fund keeps it. These are their actual slides. And what they show is, look, if the price is falling and then it goes up a bit and you've got to make a decision today whether to go L for long or S for short, i.e., do you buy here in the anticipation you can sell at a higher price and make a profit, or do you sell here in the anticipation it's going to fall and therefore you buy it back cheaper and make a profit, right? So what they said is, look, trading in a way is very simple. We're going to ride the coattails of the trends that the markets have developed. And what we'll do is if it's falling, we'll call it minus, minus, minus. And if we see a rise, we'll call it a plus, and we'll top that up. And we might call that a -2. We'll do this for every single trading scenario we can imagine. And so if it's only rising, it'll be plus, 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 plus. We'll call that a +4 and we'll go fully long. But if it's doing a mixture of rising and falling, we might go just partly long until it keeps going up and up and up, and then we might go fully long. In other words, they're changing their risk according to the strength of conviction and the trend. Now, this is very simple. It's too simple. It doesn't help you trade, but it gives you the idea that even the biggest funds actually start off with a very simple concept. Okay, now I'm going to show you the strategy I think you should be using, but my point to you is just because something isn't incredibly ridiculously complicated doesn't mean it isn't valid. Having said all of that, one of the big problems we have is most people don't know what's going on. The rule should be use modern technology. These are lovely Amish people in probably Pennsylvania in the United States. Anyway, my point is, and no disrespect to them, my point is the world's moved on. The Sandy Judges and all them lot are still talking about head and shoulders and supports and resistances when the world's moved on, okay? And we need to use modern technology to keep up with the markets. And I'm going to show you what that modern technology is. All right. After all, if you don't believe me, look at this. Flash crash of the pound baffles traders with algorithms being blamed. If you don't know what algos are and how they're affecting the markets, how are you going to be using techniques from 20, 30 years ago before algos were prevalent? Not only that, look at this. Dan Druckerman, this is from Bloomberg. Stan Druckenmiller says algo is robbing the markets of trade signals. Billionaire Stan Druckenmiller is glad he's no longer in the hedge fund business now that algorithmic trading have taken over the markets. So what business do you have trying to make money from it? I'll tell you what it is. Stan Druckenmiller came from an era when they were using the kind of techniques these other traders are trying to teach you, which is just have a long, lazy lunch and say, I think we'll go long the euro. And you had 3 days, 4 or 5 days in which to place that trade, another 4 or 5 weeks where it would just come to fruition. Value would take a long time to get to where it should. Nowadays, thanks to modern technology, not least Twitter, these moves happen bigger in size, sooner in time frame. Okay, bigger in size, sooner in time frame. Values, because information is more efficient. It moves around more efficient. So people like him are leaving. So we've got to make sure whatever we're doing, we're not doing something which even the billionaires are saying they're giving up on. We're not. We're gonna do things that they're not used to being able to do. There's something else I need to tell you. I want you to write this down. Trading is the best entrepreneurial business in the world. I want you to remember that. You are all about, thanks to this webinar, becoming entrepreneurs. You're going to become fintech entrepreneurs, finance, technology entrepreneurs, okay? You can have your own side business. Somebody asks you what you do, it's not going to be, I trade. It's going to be, I've got a business in the markets. And I'll tell you why. You don't have to have, the reason it's the best business in the world is if you want to buy something or sell something, you don't need to take an ad out. You don't need a shop. You don't need staff, marketing people. You just press a button and you've sold it. You want to buy it? Press a button, you've bought it. It's the most efficient market in the world. There's no overheads, there's no cost, there's no insurance cost, there's no warehouse cost, there's nothing. And you know what's even better? 80% of private investors lose money. That means 20% make money. In the real world, in any other business, 90% go bust within 3 years of any business. So if you've got a shop or a restaurant, 90% close within 3 years. Given that that's the case, you're actually better off being an entrepreneur as a trader than you are in the broader markets. Okay, so that's why I want you to have this attitude that you're traders. You're here to be traders, okay? And that's why we've got to learn these other techniques, not least because, look at this. As I said before, we're not trying to understand the markets. We just want to buy low, sell high, riding somebody else's coattails, because completely bizarre stock moves leave traders scratching heads. Actually, traders never scratch heads. Analysts might scratch heads. Journalists scratch heads is what he really means. Traders don't scratch heads. We're going to be, Alpesh, how come the pound rose yesterday? I said, well, because somebody bought a shed load of it. Why did they buy a shed load of it? Because they saw somebody else buying a shed load of it. Okay, why did the first person throw the first stone and start buying a load of it? And I said, well, it might be in a tweet or something. Who knows? Who knows? You know, how do rumors happen in the world? How do fights happen? How do world wars happen? Somebody shot an archduke in Austria and there was a world war. Okay, why did it happen? Should it have happened? Was that the cause? Doesn't matter. You want to buy low, sell high. You want to get in on the action. That is a trader mentality, and that's the mentality I'm trying to teach you. Okay, again, not least because algo trading dominates 80% of the stock market. So we're going to learn how to use these algorithms so that you can keep up to date, keep modern, and make money. The good news for you is this: thanks to algorithms, your workload is reduced, and the returns, thanks to elections and Brexit, are happening quicker and shorter. So it's the best time to be in the market, unless you're using techniques which were valid 5, 10, 20, 30 years ago, in which case it's the worst time to be in the market because you're going to be giving me all your money. All right? It's never been easier to take money from private investors because they don't know all this is going on. And the two areas we're going to use artificial intelligence. We're going to use pattern recognition, which is a part of artificial intelligence, and we're going to use neural networks. Okay, what are neural networks? Neural networks, really simple, overcomplicated term, big name. It's how your brain works. It's how every decision you make works. You get a lot of inputs coming in, like for instance, it's blue skies. I can see only 1 or 2 distant clouds. It's bright, and it's dry on the ground. Therefore, I don't think it's going to rain anytime soon. You've put 4 pieces of information in, you've weighed them as to what's most significant, what isn't, and you come up with an output. That's how the brain works. Artificial intelligence, neural networks is just trying to replicate that. And that's what we're going to do with trading. We're going to decide what pieces of information to put in, what weight to give them, and then come up with an outlook. Buy, sell, do nothing. Buy, sell, do nothing. That's what we're going to decide every single time. And so we need to know what information to put in. And that, again, is what this webinar is about. But this webinar is about something else. It's about making sure you're up to speed with what's happening in the world around you. It is your world, after all, because you'll have heard about things like AI. It's important you know how it's affecting your lives because it's affecting your pension plans. All right. And let me give you some more rules. And this bit's, again, really critical. Rich people know how to handle volatility, not just in trading, but in anything in life. they translate everything into how do I handle the volatility of this. Volatility, I'll explain that in a second. Rich people also risk less in more volatile markets. I've written that really badly, number 2. Rich people do risk less in volatility. Written wrong. What it means is rich people risk less money in more volatile markets. And I'll explain that in a second. Number 3, rich people double down using profits, not capital. In other words, when they made a bit of money, they use the profits to make even more. They don't use their initial capital if they can avoid it, because that's the starting point. If you use that and lose it, guess what? You're underwater. Better to use profits than capital. So how do we put this into trading language and into our trades? And fourthly, rich people care more about losing than winning. And if you don't believe me, feel free to buy the books and give me £1 in royalties if you wish. But like I said, I'm giving you the best bits in this webinar. All right. As well. So let's put all of that. What do I mean by all of this? Rich people know how to use volatility and they risk less in volatility and they double down and they care more about losing. Let me explain it this way. Okay, and if there are the secrets of trading, there are these VSL, VPS. They're what we found through our research. All the good, profitable private investors are doing, and all the most successful hedge funds are doing. And so, let me explain what it is. First of all, we need to define something: volatility. What the hell is volatility? Volatility is another word for noise. It's the movement up and down of prices in any given period. And what you might do is you might say, well, on average, if I look back over the last, say, 14 periods, and it's the principle that matters, not the exact number, say 14 periods, that the market moves up and down on the 1 hour time frame, okay, about 20 points on average. That's the noise of the market. It's 20 points up and down at any given day. It'll move up and down 20 points. Okay. So you'll say, so therefore my stop loss, because you always got to have a stop loss, I will put, say, 40 points away, 2 times the noise or 3 times the noise or any factor in between. And there isn't a hard and fast rule. It's the principle that matters. It's somewhere between twice as far and 3 times as far. Never more, never less. Okay, it's somewhere between that. You might put 2.5, 2 3/4 times that. So you might put the stop loss 40 points away. That's called a volatility-based stop loss. Why do rich people use volatility-based stop losses? Not just in trading, but in life and all decisions they make. The more volatile and noisy a market is, they don't want to be stopped out and get out of a good position just because there was noise or fear that they should. Equally, they don't want to be held on and handcuffed too long of what might turn out to be a really nasty, bad losing position. So the more volatile the market, the further away the stop loss, so they don't get knocked out by noise. But surely, Alpesh, if their stop loss is further away, then they're going to lose more money. No, because the second secret of all the best hedge funds and the richest people is volatility-based position sizing. What that means is if the stop loss is twice as far, their position is half as much. So they're not risking losing more money, right? Volatility-based position sizing. And I can go through this all later on. I'll show you how we just automate all of this. That's why I think we've got the Google of trading, but I'm giving you the manual rules of what we're doing to break it down for you. The reason I told you this and taught you this, and it might look complicated, but it is well worth learning because it's about making money, is first of all, I want you also to write down L plus L. Losers add to losers. No successful trader ever adds to a losing position or moves the stop loss further away. Put your hands up if you've added to a losing position or moved your stop loss further away ever. Put your hands up. Put it in the chat box if that's you. Okay. Put that in the chat box if it's you. By the way, 56% think it's going to be a no-deal Brexit. Wow. I'm surprised. I'm surprised you still think it's going to be a no-deal Brexit. But, you know, you guys are the boss. I'm sure you know something that I do not. Okay, here's another question for you, my friends. All right. Now, so what we do is we've got our stop loss. We can now, because we're not going to add to our losing positions, we found another way of saving money. Because we know where to put our stop loss, we found a good way of not being stopped out by losses and how to prevent big losing trades. So we found another way of saving money. I'm going to teach you something else. Because what I want you to do is see that green line and the yellow line where the stop loss is? A mirror reflection of that is this red dotted line. That's where we add to our winning positions. Why? What are we doing? Here's a technique. When we know when to buy, and I'll come to how we know when to buy in a second, which is this red dot here. If we get some profits under the belt, we risk those profits and double down our position at this point. So in anticipation of the trend going even higher, we can make more money. Now, why do we do that? The reason we do that is because it means we can start with a small trade here, just in case it becomes a loss, because we worry more about losses. but knowing that if it becomes profitable, we'll always double down anyway and make more money later. That's a asymmetric methodology which allows private investors to make a shed load more money. Why? Because it means any losses are small in size because you tried with a small position. And it means anytime you get it right, you're only risking the profits you've already made to try and make more. And because you're going to double down on that position at the additional position point, you can make a shed load more when the trends just continue. Why would you, after all, have a profit cap? Why would you, anybody who ever says to you, oh, I've got a reward risk ratio of 3 to 1, they're idiots. Why would you cap profits? A reward risk ratio suggests that you're capping your reward. It's like finding oil and saying, I'll put a cap on it and go look for oil somewhere else. That'd be stupid. Nobody does that. Nobody does that. Okay? So we're not going to do that. Of course we're not going to do that. We are not, under any circumstances, going to cap our profits. What we're going to do is when we've got some profits, we're going to double down and make even more profits. That's an important secret of what wealthy traders do. Okay? And wealthy people generally do. The rules being, they know how to handle volatility and noise so they don't get panicked out too soon of a trade, but they don't hold on to a losing position and throw good money after bad for too long. They risk less money when the markets are more volatile, but once they've got some profits, they double down because they'd rather risk profits than capital, and they care more about losing than they do about winning. So another rule, like I said, is this: W plus W. Winners add to winners. In other words, once you've got some profits at this and you've got to this red dotted line, you add to your winning position. Winners add to winners, losers add to losers. Got it? Now, so I said to Bill, I said, look, this is all well and good, but I still don't know when to enter a trade. I appreciate you've told me where to put a stop loss, when to add to a position. I can tell my broker all of this, and if I'm not going to be at my screen, this becomes a trailing stop. So it just trails the price, and at any time it gets out and I've got a wad of cash that goes into my bank account, my broker's account. But how do I know this point? 2 more questions for this webinar. How do I know this point of when to enter? And how do I know if any of this is enough to make me money for the capital that I had? Because remember, when I met Bill Lipschitz, I was just a student at university with very little money. So I said, I need to know, first of all, the business plan. Is this going to make me enough money? Should I leave being a lawyer? Because at university, I was training to be a lawyer. And secondly, if it does make me enough money, how do I know when to buy? Because as I said, you've told me the stop loss. You've told me that we don't use limit orders. We just add to our winners. You told me trading psychology because you've told me that we're going to get signals which we're going to follow, so I don't need to worry about the market so much. So that's mind. You told me how much money to put into a trade. You reduce it if the stop loss is further away. So that's M for money management. Okay, the bit that's missing out of Selma is E. How do I know when to enter? Okay, how do I know when to enter? So let me explain that. So Bill Lipschitz said to me, well, Alpesh, I know why you're here. He was a leading trader in the world. He said, do you want to know how to get rich? I said, yes. He goes, okay, write on a scrap of paper, the road to rich. And he was laughing at me, but I thought I'd do it. That's my mum. Always makes an honourable visit in all my webinars. I don't know why Prince Charles is bowing to me. We're a British Asian Trust dinner, one of the charities that I support. Please look it up, British Asian Trust. I want you to support it as well with the immense amount of money you're all going to make, okay? Now, although this says FX, ignore that part. It's for all trading as well. So Bill Lipschitz, remember, he was global head of foreign exchange, Salomon Brothers. I interviewed him for the book, one of 10 people. He said to me 20 years ago when I want to be a trader, he said, well, look, let's first of all work out a business plan and then work out how you enter a trade. So the business plan is to determine whether or not it's worth it. He said the first thing you do with a business plan is work out what your risk capital is going to be eventually, not today, but eventually, say in 12 months, if you're successful. Well, if I said to him, if I'm successful at trading and consistently profitable over a 12-month period, I'll manage to get my hands on £20,000, I told him. I'll get it from, friends, family, whatever. If I'm consistently profitable with the track record, they'll give it to me. So I said that. And he said, well, that's all well and good, but we've got to set your risk capital at 20,000, not what you got today, where it's going to be. And he said, trading is often like driving a car. You've got rear view mirrors, got wing mirrors, you've got steering wheel, you've got a clutch, a brake. It all seems too complicated. Too many things to look at, stop losses, entries. When do we add to a position? But he said, once you get used to it, you do it subconsciously, almost without thinking. And given that you can do it almost without thinking, don't worry, persevere. Because the reason we do anything in life are the 3 F's: funds, i.e. money, fun, fulfillment. And well, let's add a 4th F, freedom. Okay. That's why we drive. Funds will make more money if we can drive, I'm sure. It gets us around, makes us more efficient. Freedom, fulfillment. All right. Now, given that those other and fun, given that those are the reasons, he said, you want to persist with trading as well. So let's get on with that business plan. Should we be trading? That was the issue. And we called it Road to Rich because he was laughing at me slightly, but let's call it Road to Rich. And this is going to be your business plan. So now in the webinar, I'm going to give you the business plan. I'm going to give you the strategy for entry, which is one of our oldest algorithms, but you can use it. It's no skin off our nose. Because if you buy into a $5 trillion foreign exchange market, maybe you'll move the market a little bit in our favor because you'd be in the same thing as us. Right? You can see why it's no skin off our nose. Okay. And then we're going to do the Q&A and brokers and which ones you can trust or can't and why you can't trust any of them and all the rest of it and wrap everything up. So the next bit, business plan, then the entry strategy. So he said, right, let's start off with the loss. I told you rich people are obsessed with losses. He said the maximum loss is 1% of your total capital is what you'll set it at before you exit. That'll be where you put your stop loss. I went, okay, fine. I didn't question him. He said, just trust me with these figures for now. I said, okay. So let's say we've got total capital of £20,000. Obviously, you don't have that today, or $20,000 or whatever else it might be. Obviously, you don't have that today as we're speaking. It's what you intend to have. It's where you will eventually get to. By the way, we're short on Ripple after that massive long trade yesterday. I better just let you know, we are short Ripple. We were long, and you saw that yesterday we were long. Another short, sort of small long position there, which didn't last much, because then it's been short all the way. So this is where we are at the moment. We're just short Ripple. Okay, if anybody needs to know where we are, we're short Ripple and the price is still fairly close to entry. So I don't mind if you get in a little bit late onto that because we think the trend downwards will continue for a while. We'll come back to some more of those trades in a second. So the total capital, £20,000, fine. That means the maximum loss per trade would be 1% of £20,000 if our stop loss was hit, £200. I understood that. He said to me, assume for a second, through all the trading strategies I'm going to teach you, he told me, that you're only going to be right 60 times out of 100. So 60 trades will be profitable. Out of 100 trades you do, and 40 will be loss-making. And I said, why so low? And he said, well, look, a coin's 50-50. Let's assume you're going to be a bit better than a coin. I said, well, why can't I be right all the time? I mean, after all, I've got the global head of foreign exchange at Salomon Brothers teaching me. Surely I should be right on every single trade and making big profits. And he said, no, bullshit. Of course you shouldn't. That's not reality. It's not truth. What happens because you don't have a crystal ball or a time machine? What will happen in reality is you might be right. You might have a winning streak where you're right 10 times out of 10, or a losing streak where you're right no times out of 10. But on average, you'll probably be right a bit more than 50% of the time. And that's good news, he told me. And I said, how's that good news? And he said, well, if you're profitable by being right just 60% of the time, then if you have a losing streak, you won't be that much off profitability. Okay, and if you have a winning streak, you'll be really profitable. There was some numpty a while back, a footballer who used to advertise, he's gone now because like they all do. He said, oh, I'm right 93% of the time. And I was thinking, yeah, sure, mate, here's £1 million, come work for me. And he just froze. I told him at a London investor show, I said, I hear you're right 100% of the time. Here's £1 million, want to come work for me anyway? He obviously knew he'd been rattled. This happens a lot, okay? Average loss, £200. 1% of 20,000. Average win. Remember, winners add to winners. We're going to have a strategy where we make more money when we win than we lose when we lose. That being the case, okay, that being the case that we're going to make more money when we win than when we lose. When we lose, let's assume we make £300 when we win. Now, take these figures for now, is what I'm saying. Right, average win, £300 therefore. Let's say you did 100 trades. And I went through this with Bill Lipschitz. Remember, I was at university. I had no silver spoon in my mouth. I'm going through all of this math. And then I say, hang on, that means 60 winning trades at £300 profit. That's £18,000 in profit. That's amazing. Even if I subtract the 40 losing trades at £200 in losses, £8,000, I said, per 100 trades, that's a net profit of £10,000 per 100 trades. I told him, call my parents, tell them I'm leaving university. I want to spend my life sitting at my desk in my underpants, eating nachos, getting fat, and just banging away at the keyboard and make £10,000 for every 100 trades. Obviously, that's the dream you all want. That's the dream I thought I could have as well. And I said, not least because, Bill, look at this. So then I went crazy with my calculator. I said, Bill, if I become a day trader, because 20 years ago, that was all the rage, and I do 100 trades every week, why not? There's so many instruments. Okay, and there's 50 weeks in a year because the other 2 weeks of the year, I'll be holidaying on my yacht. I don't have a yacht, okay? But anyway, that's 5,000 trades per annum. on the maths of £10,000 per 100 trades, that means I'd make £500,000 a year. I know what you're all thinking. Don't be stupid, Alpesh. What are you smoking? We are not going to do 3/4 of that. We're not going to do 2/3 of that. We are not going to do a half of that, or even a third, a quarter, a fifth, or 15% of that. So wait, let's say we did 10% of that. Let's assume for a second we just did 10%. That's still £50,000. Well, 10% of our business plan is good because that means that we're still making a lot of money, even if we only do 10% of our business plan. Okay, but hang on. I said our goal was to make 500 to 1,000 per month. That's actually our goal. It's not 50,000 a year. So our goal isn't 10% of our business plan. Given that it's not 10% of our business plan, Bill said to me, so now you can afford to calm down and maybe keep your day job. Keep your day job. Go train to be a lawyer, which is what I did. He said, keep your day job. You don't have to tell parents you're leaving. Do 100 trades every 6 months, not in a week, across 6 months. You know what that is? One a day. Remember I told you earlier on, I want you just to do one trade a day when you're scanning 12 to 24 instruments, which are quite diverse. Everything from Apple to Euro dollar to the DAX. These are diverse. So you're not just betting on sterling, betting on euros, which is all to do with the general election and Brexit. Instead, you've got diversity because you've also got Citibank. You've also got Google and so on and so forth. Again, the DAX and so on. Okay, I could be more diversified, but this is just to show you for the webinar what we're looking at with our biggest positions at the moment. Right, so that being the case, he said just do one trade a day, 200 per annum. That's £20,000 per annum, which isn't 10% of the business plan. It's about 4% of this business plan. And I would say, okay, if I hit 4% of my business plan, that's pretty good going, isn't it? Well, hang on. 4% of the business plan was still way more than the 1,000 per month, which I said we were after. So in actual fact, we needed to do about slightly over 1% of the business plan in order to hit our target of 1,000 a month. So that's a good business plan. That's a business plan worth pursuing because even if you miss it massively, you're still going to be profitable. But then I said to him, hang on, Bill. And this is what you should be asking me right now. If these numbers are correct, even remotely correct, and I only need to do 1.8% of my business plan to hit my target of 1,000 per month, how come everybody isn't rich? That's what you should be asking me, and that's what I asked him. And he said there's 3 reasons people aren't rich. 1, bad teachers. 2, bad mentors. 3, bad strategies. I said, okay, let's now talk about strategies then in this webinar. Let's talk strategies, okay? I said, well, that's fair enough. If that's what you say are the reason they're not rich, let's talk strategies. Now, remember, what we're going to do is 100 trades for 6 months, 200 trades per annum, or one a day, £20,000 per annum. No, it's not. Remember what I said? 1K per month. That's my mum again, by the way. As I said, honorable visit in each webinar. 1K per month. All right, that's what we're going to do. We're going to do 1K per month. So going back to reminding you, why are people not rich? Bad teachers, bad mentors, bad strategies. So let's focus in the last part of the webinar before the Q&A, the strategies. And remember, the strategy we're using is we're going to ride coattails. So this is the strategy Bill Lipschitz taught me, global head of foreign exchange at Salomon Brothers. I'm just expounding on what somebody else taught me. So I'm not giving you some secrets, just what he gave me. And I published it in the Financial Times before as well. So it's all fine. Okay. And it's this. We're going to ride the coattail. That's us. That is us, right? Somebody else moves the market, which is the guy in the black bowler hat. That could be Goldman Sachs, right? GS. Us is the guy there. So I said to Bill, so how do I find out when the market's got some momentum, when it's likely to move up? How do I find that? And he said, the best way to find that is to measure how close to the high the price closes in every given period. I said, okay, how am I going to do that? With a bloody magnifying glass. And why should that work? He goes, well, the reason it should work is this. It's a bit like those auctions. If the price closes near the high, it means there's a lot of buying pressure. And that means it's likely to move higher in the next period because it closed near its high. People hadn't got satisfied in that period with the prices, and it's likely to go up in the next period. And he said, like those auctions, you know, when somebody goes, I got 40, enemy give me 50, I got 50, enemy give me 60, I got 60, enemy give me 70, there's momentum. And if the price is closing near the high, it means that it's more likely, there's a higher probability, but not a certainty, it's going to move up in the next period. I said to him, well, that's all well and good, but I'm a poor student. I can't afford software to monitor all of this. How am I going to do it? He said, well, you're right. You're a poor student. So let's use some of the techniques hedge funds use to find this information. Okay, they use their own proprietary indicators. He said, you're going to have to use ones which are publicly available, which means you won't be as good as a hedge fund, but you'll make enough money. And you're going to use the 3 rules all hedge funds use, which is they never rely on one form of measurement or one indicator. They always corroborate it with multiple indicators because they want to filter. MI, multiple indicators. They want to filter away. Only when all the evidence, it's like a prosecution beyond all reasonable doubt, is showing that it's likely to move. So there's many ways out there to measure if the price is closing near the high. You could measure if the price is closing near the high. You could measure their higher highs. You could measure if they're higher lows. Those are all different mathematical formulas for measuring that. And we needed to use ones which are widely available, but to avoid the mistakes that no one indicator works all the time. No technical indicator works all the time. Okay, you should know that. Algorithms have removed that possibility from them. They've degraded them. So we needed to use multiple indicators because no one works all the time. And we look to make sure, are all of them showing a potential purchase? But we don't use the rules in the way the textbooks do, because the textbooks, again, they've been used to destruction and the indicators won't work. What we do instead, we don't use them the way the textbooks do. So we're using multiple indicators. I'll tell you which ones in a second, but not the way the textbooks do. The second rule of all hedge funds is not just multiple indicators, although the indicators they use might differ, but not just multiple indicators, but multiple timeframes. You don't just look to see are those indicators showing that you should purchase in this time frame, but in the next time frame along, because on a longer term time frame, there might be a bigger wall of money coming in. It's a bit like, have you ever bought a trade and then the very next minute it's gone down? Put your hands up if you have. And the reason is you've looked at this time frame, but you didn't see on the longer term time frame there was selling pressure. So we look at the same indicators, and I'll tell you which ones and how in a second, but on multiple time frames. And the third and final thing is this. We also look at PR and PC, and I'll explain what that is. And that was critical to success. You can't just do one of these things. You've got to do all 3. So what were they? Well, the multiple indicators, because I was a poor student, we had to use were the ones which are widely available, like the MACD, but not the way the textbooks do. What we did, because some of these indicators are lagging, some are premature, is we looked to see are they flat to rising. I'll show you how to download all of this so it can be done automatically. But at the moment, I'm showing you the manual way of doing it so you understand it all. Okay, so we're doing the manual way first. Were these multiple indicators which measure if the price is closing near the high in each period, were they flat to rising? That's what we were looking for. So we looked at the MACD, the stochastic, the RSI. Some of these are too premature, some of them are lagging, but by filtering them, a bit like when you use a filter in a water machine to filter out the dirt, each filter might remove a bit of the bad trades. So we're not going to do this trade, not going to do that, because all 3 of these indicators aren't all showing that they're flat to rising, therefore that we should buy. So multiple indicators, multiple corroborative evidence is what all hedge funds do in a way that the textbooks don't. Okay, and then they look at the next time frame. So multiple time frames, particularly this time around general election and Brexit, where the markets are more volatile, you really want corroboration from multiple indicators. And I'll show you how to download it. Don't worry. I'll show you all of that. So that being the case, and multiple time frames, what's PCPR, which was rule number 3? PCPR. Well, PC is price confirmation. The most critical thing after we found multiple indicators were flat to rising across multiple time frames was, did the price make a 2-period high? And the reason for that is that shows somebody's put money into it. Somebody's got coattails we can ride on the back of. If you can't ride on the back of the coattails, you're just a smart person, but the rest of the market disagrees with you. Okay, so 2-period high. That was price confirmation. But on top of that, we also had PR. What's PR? That's pattern recognition. This is where we used artificial intelligence. Now, you're not going to do that, so don't worry. You won't be as profitable as a hedge fund, but it doesn't matter. Pattern recognition is where we collected an ongoing library of patterns, weighing up which elements of the sub patterns were the most important, likely to lead to a price rise. Okay, you don't need to know about that, but that was artificial intelligence. It was to look at patterns and to determine and discern that there were certain patterns and certain weightings of certain sub patterns which would give us a higher indication of a price going to move up and a bigger move, because we want not just the direction, but the size. We want it to have an idea that there'll be a lot more momentum and a greater impetus. Now, I used this strategy. I developed it when I was at university, obviously not the AI part, that was done to improve it. So that was 20 odd years ago. Red Carnation last exam. Sorry, I look a bit of a, well, you know, perfected the strategy over there. I've won awards, such as in the Financial Times, Patel's FTSE 100, top FTSE 100 forecaster. Okay, the Financial Times then said, bloody hell, you won a competition over a 12-month period to forecast the markets, and you're that good. Will you write a book? And I thought, yeah, that'll help raise my profile so I can raise a fund. Simple as that. Okay, And I did that. And in that competition, you see Alpesh Patel was ranked number 1. Number 14 was one Neil Woodford, who was rubbish then 14 years ago, and he's rubbish now. All right. And you've seen what happened. Everybody should have given me $10 billion instead of him, but they didn't. I don't know what it is about me compared to Neil Woodford, who's very well connected. It is about who you know, not what you know. At that time, I didn't know anybody in the city. He did. So he was able to raise that money. I wasn't. He's rubbish, even though it was mentioned in the national newspaper. Anyway, I'm still bitter about it and bloody angry about it. And there's a lot of people who lost money by giving money to him instead of giving it to me. All right. So the Financial Times said, will you do a weekly diary? I said, yes. Then Merrill Lynch HSBC came along. And they said, we'll license this indicator, this super indicator, this mega indicator you've got, which has got multiple sub indicators across multiple timeframes, scanning the markets 24/7. I'll say that again, scanning the markets 24/7, this super indicator with multiple sub indicators within it, scanning the markets. And we will pay you. In essence, they and a few other banks paid about $1 million, which then allowed me to set up my first hedge fund. That's me at my first hedge fund with lots of hair. Wish I had that now. Okay, it cost $1 million to set up a hedge fund. Why? Because you've got auditors, accountants, custodian, bank. Okay, you've got lawyers to pay. We use Simmons & Simmons in the UK, and in the Cayman, we use Walkers. If anybody's interested, E&Y are auditors and Rothschilds are the bankers. Okay, the initial brokers we used, Bear Stearns, and then MF Global. I'm fed up with brokers which keep getting bust. Anyway, that's a separate issue. That's what led to success. It was that. So then I said to people, well, I've given you the manual rules. What more do you want? Multiple indicators, multiple time frames, flat to rising. And they said, no, Alpesh. For us to be successful, the ideal, I said, what's your ideal scenario? After all, there's all these trading rooms and academies and bullshit trading universities. You know how you know something's a scam? They'll call themselves a university, an academy, an institute, or a school. Right? Bullshit. Call bullshit on them when they say that. You know how that's bullshit? Universities need to be regulated. So do academies, so do institutes, so do schools. How come? What rights do they have not to be regulated and call themselves that? There's a woman out there. I think she's Indian woman, Indian like me, who goes around calling herself a hedge fund manager. She doesn't got a freaking clue what a hedge fund is. I know, because when people asked her, and I told them, ask her what an LP is. Ask her what a GPLP structure is. Ask her who her custodians are. I'm like, what? Okay. Anyway, so I asked people, what more do you want than this to make money? What is going to make you money? Because my job is to try and make you money, for God's sake. And they said, well, actually, we want something which just doesn't give us the indicators like you've got here, telling us when to buy, when to sell. We want to actually more than that. Look, that's Ripple, and it's dropped even more today, thanks you people. So we had that trade from yesterday, which was long. This one didn't do anything. And then this one's going short and is making money for us on the short side, which is fine because I've got a long-term position in Ripple. So any short trades here, let's say we made for argument's sake, £1,000 profit. That'll pay for my long position, for which, for argument's sake, I paid £10,000. Okay. So now my cost of acquisition of the long position is only £9,000. Do you understand how we hedge different timeframes to make sure our long-term positions are free by going short in the short term? Yeah, I'll teach you more of that later anyway. But my point is this. People said they wanted not just the software to show them multiple indicators, multiple timeframes, flat to rising, and then to go short or long. And not just what it also does is show them where the stop loss is, as you can see up here, the yellow lines and the wording there, and also how much money, depending on if they do, what position size they do, how much money they might win or lose when to add to a position as well. All of this, even if you're not in front of the screen, you just scan the screen 15 minutes a day, and one of these 15 will show that, or you can get an alert on your phone. The point is, we use technology to simplify our lives, but people said they wanted more than just all of that on a computer screen. They actually wanted to learn more about the markets and everything behind it at their own pace. They wanted one-to-one attention, not just software. They wanted everything that goes around it, the whole mentoring. They wanted me to be their mentor. They didn't want to pay anything every day, every week, every month, because I asked them, what's your wet dream? What is it that you want? Okay, on all of this. They said they wanted something compatible with work as well, because they got a day job. So I said, well, the markets are 24 hours a day, 6 days a week, so don't worry about that. They said they therefore didn't want to come into hotels and have travel costs to learn at a desk for a weekend. They wanted lifetime mentoring from me. And I thought, geez, but they don't want to pay anything every day, every week, every month. I thought, okay. So I ignored it for a while. They wanted ongoing support, something built for the student, something where they can say, look, my strengths are these, my weaknesses are this. So it's bespoke to the individual student. All right. They didn't want to be paying £2,000 for a weekend and then somebody leaves them to it. And I said, fine, I will try and think how we can create this for you. How do we create something which has all of those features for you, okay, and can make you lots of money as well going into it. And, you know, on top of that, one of the rules is we've got to be bionic. So I said, well, if I'm going to do this, I think it's got to be technology. Why? Because being human and trading like a regular person isn't going to make you money. But there's another reason. There's another rule. Don't we use modern time-saving devices everywhere else? I mean, look at this guy. He's wiping the floor, but shouldn't he be using this Dyson instead? Okay, look at these guys, right? They're trying to pick one trade at a time. Should they not be using a combine harvester? Isn't that a hell of a lot better instead? Okay, so what we did, we created something called Project pipspredator. Right, which is what I said to my team. I want to spin out the technology we're using in our own hedge fund, and I want to see if we can turn it into a billion-dollar technology company, into the Google of trading. And I think we can. We've spoken to venture capitalists. They're interested in investing, specifically SoftBank, Google Ventures, Amazon Ventures, okay, because they understand big data. And I said, this is an algorithm which, just like Google, searches information and looks to see is the price move likely, i.e., are there multiple indicators flat to rising where the price is closing near the high across multiple timeframes with price confirmation and pattern recognition. And if so, it'll show a signal. And you'll still have me to connect to, and I'll show you my trades, and I'll give you my daily news, and I'll be on WhatsApp with you, and I'll give you a 12-week course if you really want to learn up even beyond just following the software signals, and for life, and not pay anything every day, every week, every month. And I thought, well, how do we make this into a billion-dollar business? We can't just charge somebody $1 billion on this. I can't charge Kara, Sanjay, Robert, Mark, Clive, James, Bavik, who have we got here? Sylvain, Sanj, Sandeep, PJ, and all of these people, Derek. I can't charge any of them $1 billion. So how do we do it? So we realize what we've got to do is get them to use it, get them to be profitable, okay, and then go to the venture capitalists and say, look, this can make people profitable. Give us capital so we can float this and make it available to people at a commercial cost. Okay, and then thought, okay, so this is the maths behind it. This is probably one of the most important charts. What we found, rule, know how much money does something make, okay? We found the 1 hour time frame was the most efficient, the most productive. Why? Because you'd get about 25 trades in a typical month. Some months, you might get 40, like this month we will because of the general election. Next month we will because of the general elections. Okay. And some months, if it's quiet, you might only make 16 trades. The benefit of the indicator was the net pips captured using the strategies and the methodologies I've told you, using the algorithms I've told you, which is what the pipspredator does, super algo. It uses multiple indicators to filter out because we know that we've got a filter. We know we need stop losses based on volatility. It does all of that for you. The net pips capture is 2,250 in a month. What does that mean? Well, some months you might have captured, that's winning profits minus losses. Net pips. Some months you might have made 4,000. Some months you might have made nothing. But remember, I said the aim of successful trading is some months you make more and you keep that for the months in which you make less. So you iron it out. On average, you're making 500,000 a month. But wait, let me show you what's important. The best winning streak, we had 70 winning trades out of 100. The worst was 30 winning trades out of 100. But that's not what's important, as you'll see in a second. The typical maximum stop loss before we got stopped out of a trade was about 50 points, the most we could lose. Now, imagine you did a whopping $2 a trade. I don't recommend you do. Then you would lose 2 times 50 on any one trade, $100. That's way too much, but bear with me. 2 times 2,250 net pips captured in a month is therefore $4,500 profit in a month. Well, hang on. I said we're targeting 500 a month. We're targeting 10% of that. That means we don't need to do $2 a month trades. We can do 20 cents. We can do 10% of that, 20 cents or 20 pence. And there are brokers which will let you do that. That's when we knew we had a mass market product. We knew we had the Google of trading, something relevant for all traders because you could do it with 20 cents a point. So I said to people, what more do you want? What's stopping you from getting rich trading? If I give you the software, they said, well, we want definitely a hedge fund manager teaching us, not these pseudo people who haven't got a bloody clue. We want somebody who's a professionally trained communicator, because if you're going to put course materials together for us, we want videos and webinars to be bloody interesting. We want somebody who's paid by Bloomberg and Financial Times, i.e. the two most reputable financial publications in the world. So we know it's been due diligence. None of the people, anybody else you ever hear telling you about software or telling you about trading have got those credentials that I have. So I thought, I think we've got $1 billion business here. I really do. I think we've got the Google of trading technology. I think we've got something where we've got credentials like nobody else. We've got no competition. They said we want continued academic research. Well, I'm a visiting fellow at Oxford University. I lectured there just last week on behavioral finance. So we continue our research in association with the university. Okay. Award-winning picks. You already saw my Financial Times awards. I thought, hang on. Not only that, I've been vetted for about 20 years on my picks, where I've even talked about indicators that traders use openly on air, been invited to talk about it, how we trade now, how we make money, how we don't. And the fact of the matter is, you only get asked to do those things if you're bloody good and you're accurate and you're right. And that's where you get asked time and time again. So I thought, we've got no competition. Okay. And given that that's the case, Tinar, there's no need to add other indicators to filter bad trades, but you can. Sometimes what people do is they say, well, I'm going to use your indicator alongside my own, and that's perfectly fine. No problems at all. They just add to it, and that's fine. So I thought, my God, we're on to something big. I'll show you how to download this in a second. Don't worry. So the issue is, can it make money? Well, I've shown you how it can. I'll show you some more. Is it easy? Yes, because we use it and you can do it with a day job. Can you do it any time with a day job? Yes. How much money does it make? I'll show you some more winning trades. Does it make life easier? Hell yes. Are there checklists and simple rules? Yes, which I'll give you with a training manual, but also the course, the 12-week course, the WhatsApp access to me. Look over my shoulder, see the live trades we're making, get the alerts if you wish. Look at it on your own computer, sitting there on your computer, looking at it as well. See the news we're doing, everything you could possibly imagine as the definition of mentoring. Mentoring occurs through my webinars, through me taking your trades, you sending me them, you showing me your live trades. You also going on to my webinars, looking at my course material if you wish, or mentoring could be just you look at the software and that's it. It's up to you how you want to be mentored, but every single possible way you could possibly want to be mentored, it's there at your own time frame. So we had one guy, full disclosure, this is not one of my trades, it's one of my apprentices. He did the Euro US dollar 5-minute bars. Euro US dollar 5-minute bars over 3 hours, it moved up 75 pips, including additional positions. Okay, 75 times $30 a pip, that was $2,250. Okay, now why $30 a pip? Well, because if you're consistently profitable, you scale up, scale up, scale up. He's doing at a level where now he's got a high net worth and he's moving higher. Okay, again, full disclosure, not one of my trades, one of my apprentices, 15-minute bars, and theirs was 73 pips, including additional positions, $2,190 over 9 hours. Bigger trades because they've got consistently profitable. So who will vouch for it? Of course, everybody wants to know this. Okay, who would vouch for it? Well, how about this? This is the chairman of the world's largest exchange. See, people often when they're looking at software or they're looking at education, they'll get some actress from Croydon or some actor from Manchester, and Mr. Smith, yeah, it was very good. Mr. Double Decker is so good. Mr. Winner Winner Chicken Dinner is so fantastic at trading. No, none of them can get the chairman of the Chicago Board of Trade is the world's largest exchange and a trader himself, put into print on a Financial Times book so you know he's got a reputation to lose, okay, gets to the heart of the matter of trading by clearly elucidating the methodologies of successful trading strategies. Successful trading strategies. Successful trading strategies. Financial Times, Chairman, Chicago Board of Trade. I could not do better than that. When I'm putting all these dots together thinking, my God, we've got to spin this technology out. It's one thing in our hedge fund, we want to try and get to $1 billion. We've only got in 10 years to 100 million euros under assets under management. Why? Well, because we go in after Goldman Sachs and before Morgan Stanley, people always give them capital. So I thought, why not spin the technology out and be a fintech $1 billion company? Use the same know-how we've got in the fund. After all, that's what a hedge fund is. It's using your know-how to manage capital. Why not use the know-how to be like Google and $1 billion business? Because what we wanted was people to go from this to this, this to this. It's as simple as that. We want them using the indicator to go from confused to being an expert, from being a wimp to, hey, this is easy. I can do this. Because without an indicator, without pipspredator, we think private investors are trading like this. They're digging for a trade all day long. Whereas with automation, with robotics, with algorithms, this scanning the markets allows you to find a lot more opportunities and gets you there sooner. One of my favorite apprentices, this chap, Piku Alawali, he's formerly at Barclays Bank, left school at 16, worked at Barclays in London, now lives in Dubai. I love the pipspredator. I now spend most of my time trading, and I love that as a novice. I know what to trade when and can get on with other work, okay? My most successful apprentice, this lady, Naomi Waystall, investment manager at Newton. She now manages $10 billion. What did you expect I was going to say about my most successful one? Oh, Mrs. Jones, who's a housewife and 79 years old, she's my most successful. No, we do have a lot of retirees. We actually have a disproportionate number of women. I think they prefer not being surrounded by alpha male gorillas in a classroom who are going, oh, I'm aggressive. You know, they prefer... that's what our research suggests and the feedback suggests. They prefer doing it like this. Anyway, Naomi left university, was my trading assistant for 5 years, and then she joined Newton. Now she manages $10 billion. The way I'm doing this, the mentoring through the course material, through the WhatsApp, through emails, through webinars, through Meeting Me, and the software, is in order to make this into a $1 billion company, I am taking apprentices in batches of 25. Wherever they are in the world, they remotely get access to all of this, all the software, see our trades. We send them weekly newsletters, we send them daily newsletters, and they actually have this software sitting on their desk so they can live monitor everything I'm trading, so they can start making money in 5 minutes after this webinar in Ripple, okay, or whatever else. What we're doing is taking them in batches of 25 at a time. Remember, this indicator, the pipspredator, it tells you the stop losses, it tells you the entry, everything else based on multiple indicators across multiple time frames, tells you the yellow stop loss, there's the line, tells you when to double down. Okay, it can be used with any broker because it's broker independent, because it's giving you the signals, it monitors all the markets and can send you the signal if you wish, the alert if you wish. I take people in batches of 25 because I'm doing the mentoring for the first 1,000. Okay, we've got to about 800 who've gone through the program. We want 1,000 to get to profitability. I take them in batches of 25 so I can monitor them for life. You'll always have me as your mentor for life. After it gets past 1,000, there might be other people. We'll get outside investment. There'll be other tutors. So the first 1,000 I want to take to the venture capitalists who've got to profitability and say, my company is now worth at $30 to $40 million because guess what? There's 1,000 people who are profitable. And the only thing I ask of you is two things. You're enthusiastic and you tell the honest truth to the venture capitalists. Okay. If they were to ask you good, bad, or poor, good, bad, or ugly experience, and you can say, well, I made profit, so I'm happy. That's the only two things I ask of you. Okay. I also, for everybody trying this indicator, I give them a signed copy of my 2 most recent books in a USB, which I'm trying to find. I can't find the USB. Okay. Little USB, which shows them every single, all the information as well on there. Plus you've got online 12-week course, an online 30-day course, a community of all the trader apprentices together where they can see our trades every day as well as all the live trades and the software, all of that as well. And there's no daily cost, no weekly cost, no monthly cost. All the data is in there. Live real-time data is included in there for life. Okay. Upgrades are free for life. Updates are free for life. The daily trades, all of that is included in that. Okay. And I want you to use it for 30 days. No quibble money back guarantee, not 7 days, not 14, not 21, 30 whole days. All right. And keep the books just for trying it for those 30 days and give me your feedback. You can have it for life, obviously, after that. It's yours for life. But I'm just saying 30-day risk-free trial, 30-day no quibble, 100% money back guarantee on that. But I only limit it. I'm afraid. Okay. This is the downside. I'm limiting it only to 25 at a time. We think we've got the Google of trading. We think we've got $1 billion company. The plan is to float it next year. I want everybody who's an apprentice to have free shares in it, subject to what the lawyers say. But like I said, only 25 licenses at a time to use the software, the mentoring, everything else. It's yours for life. Upgrades are for life. There's no daily cost, weekly cost, monthly cost. To sign up, okay, you go here. To sign up, there's no daily cost, weekly cost, monthly cost. It's just a one-off. To sign up, you got 30-day money back, no quibble guarantee. 30-day, no quibble, money back guarantee. Mark, I'll come to brokers in a second, my friend, in a second. It is first come, first serve, though. First come, first serve. I only want the most enthusiastic people to sign up who say, yeah, I want to make money. I want to download it and I want to start going on to there. You go to alpeshpatel.com/here. We think we're on to a massive technology business, a fintech business spun out of the hedge fund. If you go to alpeshpatel.com/here, you'll see this, the momentum indicator, which was spun out of the hedge fund. It's one of our 10 algos we use. You can use it on Mac. Michelle, you can use it on Mac. Doreen, you can use it on, Mac. A couple of you asked that, Mac. We'll install it for you if it takes more than 10 minutes. No ongoing costs, free upgrades, lifetime mentoring, and I'll show you what mentoring is again. 12-week course, 30-day course, interaction with me. You send me your trades if you wish, and I will feed back onto you. See my trades. You're looking over my shoulder to see what we're trading. I look over yours because you send me your trades. We've now got WhatsApp as well on there so you can look at me and talk to me. Okay, you click on here. Our plan is once we get past in the future, what we're going to do, not for you guys, but in the future, it's going to be £2,000 a year for the indicator, £2,000 a year for the mentoring. Not for you guys. Okay, that's what it's going to be. When you click on there, you got a 30-day no quibble money back guarantee. You don't have to send me your trades. You can use PayPal as well to pay with. If you want to use Amex, you've got to use PayPal. You don't need a PayPal account to use PayPal. Sometimes people prefer PayPal. They think it's more secure, whatever. It's all secure. You see that padlock? All your data secure. See that which says secure server? We don't hold any of your data. It goes to Barclays. Okay, Barclays hold your process your payments. We don't know any of your details at all. Because if we did, we'd have to be even more regulated, and we don't want to be regulated. So we let them handle all the transactions. And let me show you what I mean by that. We're going to use this. I've already talked about it on the BBC. I've been launched this live, and I'm really proud of it. And we've got a brand new mentoring website. So you're not just downloading the indicator as soon as you pay. What you're also doing is you're getting access to the 12-week course and the 30-day course. And it's broken down into lovely, brilliant modules. I'm really proud of this, with videos in some cases, with articles, a decision tree. You know, look at this. You've got trade decision-making mind maps. You've got videos, because some people like mind maps. Some people like videos. You've got all of this, all done by me. This is my baby, okay? It's a module, and you can see that. And because people want to be taught in different ways on the mentoring, we've got, like I said, webinars every Saturday, 6 webinars, live trading webinars as well, because I want to make sure this is not just the best software in the world, but it is absolutely the best way to teach people how to become profitable traders. You know why? Because I've got to do it myself. Can it work with 2K? Yeah, absolutely. I want you to start with smaller sums, because if you start with smaller sums and learn the skills, you will then, if you're consistently profitable, find ways of getting more capital. Getting more capital is not the way to start. You know, what we start our traders with in my firm, when they start in my firm straight out of university, and I'm off to Reading University tomorrow, where I'm hoping to hire people. Okay, do you know what we do? You know what we do? We start them off with $1,000. Why? Because it's my money they're risking and they're learning with. Learn the skills first. So absolutely. Okay. Mark, I'll send you the list of brokers, but there are many which do UK regulated brokers, or German regulated, or Australian regulated. They're the safest. Okay. And for instance, FXCM will do $10 a pip. Okay. Most want to do larger, but FXCM will do even lower than that. All right. But try InterTrader, try ETX. I'll send you a list of other brokers that I think are worth trying with. Brokers, and I'll explain to you how to get the most out of brokers as well. So what we did is I put up videos regularly, comments, notices, Goldman Sachs, monthly newsletter. I've been interviewed by the London Stock Exchange as well on artificial intelligence and trading, because you know what? I'm a big deal, I'm afraid. Okay, week 1, we walk you through all of this. You've got trade sheets you can fill in to show me your trades, a trading journal. So I'm looking over how you're doing to get you to profitability as you sign up. Oh, got a whole bunch coming through now. Yvonne, yours has gone through. So is yours. Ricky, Tammy, yours has as well. So has Sandy, yours has gone through. Kavita, yours has gone through. Got quite a few fellow Indians here today. Has gone through as well. So has Dieter. I can see that. And Barry, yep, I can see it's gone through. So I want to give a shout out to everybody who has signed up, please. So that I'm giving you a shout out. I'm very excited as well, Babs, that you're on. Good. I'm delighted on your new journey. Remember, it's an entrepreneurial journey, not just a trading journey. It is, you are going to be an entrepreneur. I want to convert you into a business person. That's what we're doing. So you've got all of this bite size, so it's easier for people on. We actually researched this to work out what was the right level for which week. How do we build it up, so that it's what people wanted. Business plan mentoring as well, why you need momentum trade, all of this. Now, you might just use this for the first 30 days and ask for your money back, keep the books, keep the USB, and just say, hey, Alpesh, I've gone through it. Thanks a lot. No, thanks. But we know, given that you're going to be consistently profitable, you're going to keep it for life. So trial it for 30 days, not 7, not 14, not 21, 30 days. We think it's the best software. Actually, forget it. I know it's the best software. Just as Steve Jobs will tell you, if he were alive, the iPhone is the best phone. Okay. And Microsoft will tell you it's the best software. I'm telling you, this is better than anything else out there. I'm telling you it's the best education for trading, because it's the only education which has been taken from Bloomberg and Financial Times and from a hedge fund manager. Nobody else has that. It's the best software because it's the only software which has ever been spun out of a hedge fund, a regulated hedge fund, for private investors. Got it? And there's no daily, weekly, monthly fees because I want you to get the profitability. No, Sylvain, you heard that wrong. I don't put $1,000 in your account. I said when I'm teaching people in my firm, I give them $1,000. You guys find your own $1,000 to start trading with. But I'm saying you can start with as little as $1,000. I don't know. I might do that in future. Actually, it's a good idea. I might create a trading account to teach you all on where it's my $1,000, but you trade with it. And if you blow it up, well, you've blown up $1,000 and that's fine. So be it. That might be a way to go. I quite like that idea, actually, because obviously some of the traders will, if they're profitable, will 10% might lose the $1,000, but the rest will have made money. So, hey, I'm profitable overall. That's a clever idea, Sylvain. I'm going to steal that idea of yours. I like it. I like what you've just said there by accident. I really like it. Lifetime mentoring. All mentoring is for life. You've got emails, videos, webinars every Saturday, 6 webinars, live webinars every Saturday. You got a dedicated website for it, which I just showed you a bit of, a 30-day course, a 12-week course, a trading man. You've got articles, you got me on WhatsApp, but I'll show you that I'm really proud of this. This is absolutely bloody amazing. I'm going to show you the brand new pipspredator.com website. So like I said, 12-week course, you've got a community website as well, where all the trading apprentices hang out. They can also search any question as well. You've got latest views, so you can see our latest views. So October 30th, that's bang up to date. That's today. You can see where we saw heat and where we didn't see heat. You can see what we traded, every single the trades that we've got open. But you've also, of course, can see what we're trading because you've got this. You've got the live software, which is showing you live positions that we like. Okay. And what you've also got is, you've got all this to choose from anyway. You might say, actually, I want to look at what you're looking at. I want to look at UBS and Visa. I want to trade or whatever else it might be. So you've got those options as well. You can place the trades through any broker. If you've already got, say, something like TradeStation, you just put this software alongside it if you wish and augment your own. Sometimes people say, you know what, I want my son or daughter to go into finance, so they get this for them because they've got me as a lifetime mentor. And that's fine by me. I don't mind. I'll teach them finance, educate them. That's important, isn't it? So you got the WhatsApp number for apprentices. You got the community site, you got the 12-week course. But I'll tell you what I want people to do. I want my apprentices to do, okay? You will also see past and present select client groups. You'll see quotes from the British Consulate, American Express, Rothschilds. I want you also to know this. We've got a support team who will help install the indicator. You've got, like I said, mentoring from me through WhatsApp, emails. You're going to be filling in forms to show me your strengths, your weaknesses. Let me know as you sign up. Thank you very much. I have got, it's gone through. Kinder, it's gone through. It's an unusual name. Kinder, it's gone through. So don't worry, I have got that through. Eggs, it's gone through as well. That's my wife's nickname. I don't think it's you though. Well, it's sort of my wife. It sounds a little bit similar to it. It's not actually her nickname. It's a bit different to that, but it sounds a bit like it. Anyway, I think she's busy at work at the moment. All right. You've also got direct lines. You've got Skype to reach me as well. You've got the office to come and visit me, but the mentoring mainly occurs through you and I conversing. You send me your trades. I'll show you what to do. You've got the manual. You've got the software. You've got the 12-week course, the 30-day course. That's how the mentoring occurs. It's for life as well. So, and the reason I say it's for life and all upgrades are for life because it's the best way to show people that we're the best in the world at what we do. All right. Now, I got a bunch of apprentices I want to go to. All right. So you wonderful people are great, but there's a whole bunch of apprentices I want to focus on, and I want to give them the strategies and the download the software and show them. Now, as soon as you pay, Michelle, as soon as you pay, that's correct. You'll be able to download it and the manual and have an email from me as well. Okay. So don't worry about that. Look, Euro suddenly turned around and we're long. And it's gone long on euro sterling, and we got the signal straight away. I also need to show you, where's it gone? Where's it gone? Somebody's asked for sterling US dollar. We've still got a long trade on that at the moment. Okay, so that's our position on that. And going into the election, there's a lot of money to be made going into this election. Hedge funds wanted this election because it gives us more volatility, which means bigger moves in a shorter space of time, which means we can hit our targets for the year in terms of profits sooner and quicker. Okay. You don't have to have WhatsApp. You don't have to. I'm just saying that's an alternative way. See, some people say to me, Alpesh, I don't want any mentoring. Some say I only want to be mentored through email. Others say I want to be mentored through emails and webinars. Others say I want to come and see you. Others say I want to speak to you on this, what I'm saying is there's a multitude of ways, okay, for you to be mentored. So you're not missing out if you don't have one methodology over another. So don't worry at all, Sai. But if you haven't signed up, Sai, because I don't remember seeing you, better be quick because the licenses are, they might already be gone. So you might not be able to get on. Sorry, maybe next time, Sai. I don't know. Are there any left? My assistant says there are 3. There are 3 left. Okay, sorry, make that 2. There are 2 left. Business plan is what we look at through people. They practice and test. We give them exams if they want it. They can use this on their LinkedIn, have a certificate of completion, use it for their jobs. I also have been helping some people with their careers, taking them as interns as well as my apprentices, which they can put on their CV because it's a regulated hedge fund. So they can say apprentice to a hedge fund. 12-week online bite-sized training. Some of you want to be full-time hedge fund managers. Some of you want to just do this as a side income. We benchmark you to see how you're doing with everyone else. It's yours for life. And this avoids all the problems that we'd have of getting people on. Sai, I'll double check if you're on. Let me just double check right now if it's gone through. Just let me know. Did you use PayPal? I'll just see if on PayPal it's gone through. Should have gone through, and you should have got an alert straight away that it's gone through. Wheel of death going on here. And it should come up. Yes. Are you smarter? I'll just say that for your privacy. Are you smarter, Sai? You know what I'm saying. Is that your company? Just let me know. Yes, it went through. Don't process it again. You're also going to get an email from me as well. Brilliant. Yes, of course. There you go. I'll send you an email from me as well, and my personal WhatsApp and everything else. So Sai and everybody else who's signed up, you're all going to get that. So don't worry. Okay. And, just to summarize why I think we've got the greatest product in the world for making more and more people, like I said, the Google of trading, more successful. Michelle's asked, how much money could you expect to make? Depends how much capital you start off with and how many signals you follow. Obviously, that's the math of it. But you're going to have me handhold you. Initially, I want you to use a demo account. Did you hear that? I want you to use a demo account, learn the skills first, and then go on. The reason why I think we've got the best thing in the world is, one, lifetime mentoring. I co-founded one of the largest mentoring organizations in the world. It's called TIE. I co-founded the UK chapter, okay, with individuals such as this, and who's a non-dom Tory. I couldn't find him in the news other than this, which is pretty bad. He's worth more than 100 million. Anyway, so I founded TIE UK, the Indus Entrepreneurs. And we know apprenticeships work. We stole this idea from the fact that we know there are many billionaires created out of apprenticeships. Lord Bamford was an apprentice, okay? He's worth 3 billion, right? The Graf family, apprentices, jewelers, worth 3 billion. John Caldwell, mobile phones, worth 1.5 billion. Sir Terry Matthews, computers, worth 1.1 billion, and so on and so forth. We know apprenticeships work as a way of, look at that, top 40 richest former apprentices. We know it's a way of teaching people to make money, and that was the proof of it. That's why we did it. We then said, what more do people want? Well, they want live 24/7 person just in case they've got issues. Those people will, my desk will contact me if I'm sleeping. Obviously, they're not going to wake me up, but it's 24/7. It's out there, right? We've also got LinkedIn. I want you to join me on LinkedIn if you're an apprentice, because you'll be able to see who I'm connected to. I'm connected to CEOs of banks, of hedge funds, so I can introduce you to those people. I introduce you to anybody on my LinkedIn, and that way you're joining my network, a proper mentoring network, because that's what a mentor should do. They should open up doors. You might want to change careers and so on, give you that kind of broader advice, not just here's a piece of software and now piss off. Use every resource at my disposal as well. This took 20 years to develop. I want to concentrate your time, now the time it takes for you to succeed. That's the point behind it. You're going to get daily news alerts. You're going to get my trading books to keep no matter what, signed copies, including one launched by Barclays last year. You're also going to get regular updates. So I've got a podcast now as well, and videos. You have to watch all of this, but I'm saying it's all in there. Okay, get to meet me, weekly live webinars on Saturday, 6 live webinars, just so you've got more interaction with me. There will be no shortage of opportunity to interact with me. You also join my trading club, the community. Like I said, we're going to limit that to 1,000 when we get to 1,000. Okay, right? Let me put it this way. Let me give you a trade. If you made £1,000 each month after practicing trading, would that be worth £10,000 as a one-off payment for a piece of software which helps you do that? Presumably it would. So we thought to ourselves, maybe we should charge 10,000. I said, no, That's immoral. Can't charge £10,000 for private investors. So we thought, okay, maybe £2,000. That's what we should charge, given that they're getting all of this stuff. And I said, no, I want it to be even less. Okay, I want it to be something where people go, God, this is a no-brainer. I want it to be a high probability trade. Let me put it this way. If you promise to share your case study with me after using the indicator, allow me to use that success story with the venture capitalist, that's why it's 997. If you don't, then it can be double. Okay, so, and this is what we found as people went along. In the first week, there was about one dropout. Second week, a dropout. Third week, dropout. Fourth week, maybe one dropout. People who were profitable within the first week were about 25%, just because they've traded and, you know, they were experienced. The ones who had never traded before and were really slow and really busy with day jobs and looking after kids or illness or whatever else and sitting in hospital beds or offshore oil tankers or whatever, for them, it took about 12 weeks. By the 12th week, about 95% were profitable by the 12th week. So you're either going to be, after the first week, in the 25% who are profitable, or by the 12th week in the 95%. One way or another, you're going to be getting profitable within that time frame. We get a bit of a sort of an acceleration after the fourth week, okay, and it sort of drops, increases sharply at that point as the penny sort of drops for people. So ask yourself, if your indicator is everything I promise, and I'm a public figure, as I've shown you, so we're not here to mess around. I've got a reputation worth far more than 997, okay, than £1,000 or €1,000. Given that I'm a public figure, and if everything that I tell you is correct, then will you, over the course of your life, make an extra £1,000 from using it? That's the trade. That's the question you got to ask. Will you make more than, will you make an extra 1,000 over the course of using it? Or, hey, in 30 days, get your money back anyway and make back the 1,000. If the answer to either of these is yes, then the rational, logical thing for any rational human being to do is to go to that website and get the software and the mentoring. That's the rational thing to do, unless you're completely irrational. And the reason I say this is what we've got. We think we beat absolutely anybody and everybody out there. So I'm really excited. I'm not sure we've got any licenses left anyway. So there we've got. And that's my ambitions. But it goes bigger than that. It's not just those things. It's these as well on top of it. You can't beat that. Nobody can beat it. Give me a name of anybody who you've heard educating. They can't beat it. Online Trading Academy can't beat it. Market Traders Institute can't beat it. Anybody with academy, trading, school, university cannot beat everything that I've just given you at the price, getting it with my credentials and with this software and the accuracy of it and the fact that it's spun out of a fund. Nobody can. And not at this price point, certainly. We're actually thinking of raising the price point significantly because we think people will trust something more if it's at a higher price. Anyway, listen, I got to go. There's money to be made. I spent enough time sort of educating people and all the rest of it. I'm just going to show you, on the Ripple trade, there we go. We are short it at the moment. There you go. There's the short trade on Ripple. You are an apprentice. It's gone through. So see me on the other side after the webinar. I'll email all the apprentices. And when you see me on the other side, what you will find out is we'll do the trade together. So don't worry. I think that was Michelle. Yeah, that was Michelle. Michelle will do the trade together on Ripple afterwards, and I'll walk you through it straight away today. Don't worry. So let's make some money. Apprentices, I'm going to see you on the other side. Sai, I'll send you the details again. Don't worry, I'll send you the details again. Just forward me the email and as to why you can't log on, and I'll just send you the correct updated details anyway through email. So you've got the direct email from me. So don't worry, Sai, you'll get that in just 1 second. Okay. Thanks everybody for being on this webinar. Apprentices, I'm going to speak to you in just a second. Just give me 2 minutes to just check some of these trades, close out some positions whilst I've been on air, and then we'll be there. Mark for weeks, so seeing same thing. Want it to work. Oh, you're Cambodian. Email me, Mark. I think I remember you. Just email me and we'll get you a broker, which will, I don't know what IRC is as a broker. Intertrader, Cambodian, there'll be US brokers, which will be relevant for Cambodia, Mark. So send it to me and we'll make sure you were on version 4 for you and that you're following the same trades as well. Because if you've had it 4 years ago, you've not on version 4, which is the latest one, which came out this year. Okay, we need you on version 4 of the indicator to get everything up to date, and we'll install that for you. Okay, so let's get you back up to speed. I do remember because you were from Cambodia, and I was out in Cambodia, I think around the time you became an apprentice as well. Fantastic. So just email me and we'll get you back up to speed and with the right broker as well. So we'll remove that hurdle for you being out there, because we've got people out in, for instance, Vietnam, Southeast Asia, and there are brokers which will accept, who are well regulated, which will accept you as a client base. Okay, because you're from an unusual jurisdiction. All right, okay, guys, I'm going to go. I am going to deal with now my existing lovely apprentices. Okay, people, so see you soon. Apprentices, I'll see you on the other side. Mark, just message me. Go to pipspredator.com. You'll find the phone number and the emails in case you haven't got them. Everybody else, I will see you on the other side. Thank you very much for being wonderful. And apprentices, love you. See you on the other side.